Hey guys, welcome back to my YouTube channel. As the previous, this is just a continuation from the previous video where we were backtesting the trim the hedge strategy. If you didn't watch it, I'll be linking it down below. So in my previous video, the one just before the one that I've uploaded, basically the one where I was mentioning that I'm not hedging, I mentioned that the reason why I'm no longer using the trim the hedge strategy is that I noticed it essentially compounds your losses. So if you need a deeper, a more in-depth explanation to that, I definitely recommend you watch that video. Otherwise, for now, I just wanted to see if we could get if we could essentially get flat on this hedge by adding a few more trades and essentially trying to balance out the system. So this is just a continuation to that video. And I noticed something once I had started the backtest, is that the analytics are not exactly correct, since they essentially include a previous approach to hedging that I was using. So I guess I'll be making another video where I'm starting from a clean project and trying to hedge. But for now, let's basically see if one can get out of this hedge. So this will be short. Let's basically see if one can get out of this hedge. So this will be short. Let's do this for like 30 minutes, I guess, and we'll see how it goes, since I wouldn't also want to have a very long video, so that it can be easier for you to consume the content and basically follow through. So yeah, let's just jump right in. So for those who might not be aware, yesterday, we were backtesting, and during the hedge we ended up with a sell trade that's pretty far away. Actually it's like 375 pips away, and a buy trade that's 167 pips away. So let's see if we could get even, or rather flat, and deal with this hedge. Yeah, and we'll see how it goes. So for now, just open the calculator. FYI, for those who watched the previous video, I still haven't fixed the bug here, but I'll be fixing it. But yeah, let's see. So we are essentially off by 0.22 lots, the delta between the two sides, basically the difference. So we are supposed to be adding a sell trade of 0.22 lots. So this trade, as you can see, it's already, I think, about 22 lots, the delta between the two sides, basically the difference. So we're supposed to be adding a sell trade of 0.22 lots. So this trade, as you can see, it's already, I think, about 20 pips away from the entry. Let me zoom in so that you can see clearly. I really hope that you can see. If you can't, please comment down below so that I can fix that in the next video. But otherwise, just use the 0.22 delta so that I can fix that in the next video. But otherwise, just use the 0.22 delta, and then I set the trade. It's a pending sell stop. It's supposed to be balancing the buy side so that you can have equal volume on both sides, buys and sells, and then we just proceed. So as you can see, the market went up a bit, so it's just proceed. So as you can see, the market went up a bit, so it's essentially saving us money from the sell side, and we just trail this order higher, then we proceed. As it is going higher, we just follow the market. I'm just by the way, whenever I'm trailing, I tend to use the highest point that we got. So if you could have seen before, if you go back in the video, you'll notice that I used the wick. So if you could have seen before, if you go back in the video, you'll notice that I used the wick, but this time just using the high. So that's how I'm doing it, just in case you might be curious. But in my normal day-to-day trading, I tend to use when I was testing this strategy out, I ended up writing a script that would trail the order throughout so that I don't have to do it manually. So that's actually something you could do. I guess I could help you guys write a script. Let me see. If I'll have free time, I'll write a script and upload it somewhere where you can download it and use it on MT5. You just activate it whenever you want to trail an order, for those ones who actually want to use this, since it should be something pretty simple to achieve. But otherwise, let's see. As you can see, the market is still heading higher. Nice. And then we continue. For those actually using this strategy, I definitely want to hear your comments on how you use it and how it's been performing on your end. Recently, in the last video, someone actually commented mentioning that, agreeing essentially with what I was saying, and actually we've been triggered. And I realized at that point that, bearing in mind that very aspect, a strategy that I've been backtesting, actually it is the backtest that I started with on this specific project, essentially involving, and these spreads are wide. I highly doubt these were the actual spreads. Forex tester, this is not good. You shouldn't like have this. This is a large spread. But in any case, the backtest that was present, the one that I started with here, essentially involved whatever I was describing, which is essentially you take a trade. So for instance, in this case, if I could have seen the market heading higher, I could have taken a slight buy scalp, and you just close it earlier. You need to decide that this amount is enough, you close it, and you build up a bunch of tiny profits. So like, you'd find yourself picking up $10 to $50 trades. You're still sitting on a major loss, let's say $300 that you're working through. But once you have enough of these tiny wins, you can decide at any point in time to close out this trade. That's essentially the other approach that I was thinking about. Because trimming, while it appears, or rather seems, and I'm doing air quotes right now, like, while it seems like it is reducing your loss, it's essentially compounding it. Since the moment you close the initial trade, your loss has just grown. So you have a larger amount that you need to work through, as opposed to actually reducing that amount. At some point it will reduce, but immediately at the point where you start actually hedging, at the point where you close the first trade that was hedged, you are essentially sitting on a larger loss than you could have if you could have just taken the loss immediately. Otherwise, let's see, maybe this next candle would get to the low. Couldn't pause it in time. Nice. Yeah. So let's just see how we could trim this, keeping a quarter of 75. If you can remember, I explained why I'm using a quarter. Let's see, 0.02 lots of the 0.36. 0.36 should be this. Wait, it's actually trimming on the same side. That's odd. Oh yeah, the calculator actually trims the farthest trade. So if you want to actually change that behavior, you could manually input this, which would be 79.03, and then it's 0.22, I believe, and then here we are keeping 19.75, so as to force it to actually trim this trade. But actually I think I could add a setting to it so that it could trim only the opposing order, and to partially close this one, and then we close this one, and then let's view the delta. 0.18. So I'm technically offloading some of a bit of the trade that I have, the trades I have open. But if you are monitoring the equity and loss not increasing, you're essentially just increasing the balance, but everything else is just floating. And yeah, the hopes for us dealing with this loss have not essentially increased so far, since the loss has been growing as opposed to shrinking. Okay, we had a slight move. I'm trying to be as fair as possible to give the strategy a fair chance to kind of showcase whether it could bring about the profit necessary. So I'm just trying to be as fair as possible, trailing without trying to mess with the results or statistics, so that, yeah, I can essentially give this a fair chance. So okay, oh damn, yeah, let's assume that we missed that. Like, I could go back and trim it, but I prefer just saying that we missed it and then we just continue, because in real life you could actually miss a trim situation, kind of situation. So we could do 80.56, 0.18, and then here we are keeping, as you can see. But if you noticed something, the amount we are making is gradually reducing. If you can remember the first trade, we kept like $100 worth on that trade, but every subsequent trade was less and less and less. So like, you make less while your loss is growing, which is actually the worrying thing that I noticed about the strategy. And that's why I was very critical on recommending you guys to use it or not. So you can actually use it, but at your own risk. Anyway, let's see. This is the buy 0.54. Nice. And you're supposed to be closing 0.03. 0.03. We close that partially. We close this one fully. Then let's see the delta. The delta is basically just the difference between the volume in the buy and the sells. 0.15. Not bad. So let's do this here. For those who are also getting concerned about this, you would notice that we now have a buy at the very extreme of the price and a sell at the very extreme of the price range, which is also something else that was a bit worrying to me. For those who haven't seen this yet, let's check it out. As you can see, the sell is almost at an extreme. The buy, we were triggered at an extreme. You might also argue that maybe we could have trimmed here, but then unless you are a robot and you could have gotten this tick price, you wouldn't have been lucky enough to trim it. So I have also tested this out by writing a robot that actually trimmed automatically for you. I used different strategies, an RSI program, an RSI strategy. I used a Bollinger Band strategy and a MACD strategy, and paired it up with an EA that automatically trims. And it didn't really show great results. If you're curious, I could upload a backtest, or rather a video showcasing that on MT5, which is where I was running my tests. But I could show you how that performed and the equity fluctuations. The balance was also fluctuating at times, since you would buy. So the moment you've closed a winning trade, since you start with the winning trade, and then you trim the loss, the balance would have increased a bit due to the profits from the winning trade, and then dumped a bit. So your balance would be looking like this. But your equity, it had wild swings. Very wild swings. Kind of synonymous to greed trading strategies. Nice, we're triggered. I'm also monitoring the time, since I have other business to attend to. But so as you can see, all these price swings are happening in between, and you're missing out. And that's why I was curious as to whether this is a viable approach for me specifically, since I'm seeing that I'm missing out on price swings, on price movements that you could have been scalping bit by bit. So maybe we could make the argument that this approach actually works best for someone who prefers swing trading. But yeah, I guess it all depends on what one prefers. Let's say 46. Okay, so we have, is it 0.15? Yeah, nice, 0.15. We have 46.28. So that's 11. And then the buy trade, we are sitting on a loss of, look at that loss growing. Okay, 0.15. And then let's see this. It has already calculated. Now we have already started trimming just a tiny bit, 0.01. We are barely trimming anything. Now if we can check this number of points, now look at this matter, 3178, and you've just closed 0.101. So we've just taken like $31 worth of applied profits, and I think that should be similar to what this one was saying. No, it was saying 23. So like, yeah, I guess, yeah, the numbers could be almost similar, but in this case you've just grown a 0.01 lot loss to $31. Can you imagine the amount of price movement that has happened? Over 300 pips just to hold on to that 0.01. But yeah, I guess it's all a matter of preference. In these cases, I noticed that as long as something makes it easy for you to trade, go ahead and use it. As long as it makes it easy for you to actually execute without worrying and follow your strategy and follow your plan, go ahead and use it. The point that I'm trying to make in this video is that I just realized that this wasn't for me. A person who actually prefers being active as opposed to this approach, which essentially forces you to be fairly passive, since assuming your capacity is one lot and you have like a 0.99 trade on either extremes, and here you're sitting on like let's even say it's like similar to this one, almost a 400 pip gap. In this case, you essentially have 0.01 lots to trade, and this barely makes up for any amount of volume to trim on either side. In these cases, you just have to accumulate your wins, and at some point you'd have enough wins to close out a bit of either trade. Then you're just going back to the strategy I'm recommending, which is essentially taking tinier trades, accumulating profits, and then using them at once to close a trade, as opposed to taking a lot of minor cuts on an opposing trade. Maybe I don't know if what I'm saying is making sense, but I guess once I get to a point where I can show you guys a backtest of the same, maybe you might find that maybe interesting. Now look at this price move. Price has almost gotten to a buy, and now we are hedged on the sell side, sitting on a significant floating loss. This is almost 16, yeah, $1,600 worth of loss, and you're just waiting. The market is still moving, but we are waiting. Let me move these ones to a point where I can see them, since they're starting to disappear from the ends. Okay, I'm trying to go faster. Oh, sorry. Okay, let's just assume that this is where I got it. Then we have 114.85. Just keeping $28 worth of that, and our buy volume is at 0.5, sitting at a loss of 1596.15. No, sorry, that's a loss. 0.02. Some of you might be asking, why couldn't I have just held on to this trade until such a point where it has made a significant chunk of profit? And in those cases, you're essentially also missing out on these moves, because the basic goal of setting a take profit and then taking a bit of profit and using it continuously is also in a bid to avoid missing a chunk of the price movement. So you're taking tinier trades, and then you're using it to trim immediately. My suggestion is, instead of trimming, you just hold on to those profits and you let your losses float. So at the point where you have accumulated enough profits to deal with the loss, you just close out all the losses at once. That was essentially that's the basic suggestion that I'm making. It might be a flawed premise, but yeah, it's worth a try in my opinion. It is worth a try. Let's see. You remove the stop loss, take profit, and then you place the pending stop order. Then you play this forward. Basically just want a good point to trail this order. But then the moments where your losses actually shrink is when you're trailing. When you're trailing your order, your loss is technically shrinking just by a bit. Okay, it seems I held on to the wrong. Nice, about that. Nice, we're triggered, but then the market is heading higher. So in this case, if it were me, I could have considered buying a very tiny scalp, buy from here up to here, or maybe wherever could have seen fit, and then exited, maybe even up to the moving average, and then you exit, take that tiny profit, and then you continue with the same approach. Okay, you missed that by a week, but maybe this one not yet. Those who might not be seeing, we aren't there yet. Nope. We missed it. Okay, that's very sad. But maybe we could be able to trim this large trade. Nope, we are also not there yet. Okay, now we're experiencing wild swings without making any progress with our scalps, with our hedge trades. Trying to move faster. Remember, we no longer have enough capacity. Let me see if we could have got it here. We no longer have, also wicked, we no longer have enough capacity to add additional trades, so for now we can't really add, but I'll be adding the moment we get to below 0.5 to see whether we could be lucky to deal with this loss. No, the spread is above. Nice, now we're good. So let's trim 0.12, and this one you're sitting on a profit of 44.95. This will be 11. And then here we are sitting at a loss. As you can see, our loss really isn't shrinking that much, but you're still dealing with it bit by bit. So closing a very tiny amount. Close that. So right now, let's see where we are at. We have 0.47 on the buy side and 0.36 on the sell side, and 0.11 difference. So we're supposed to be balancing out the buys with a sell trade of 0.11. So for now, I'll just place the sell trade, but I'll be in the market for another trade if I get a good signal. Let's see, does it actually have the correct details? I wasn't sure. Nice. Then let me just zoom in so that I can better trail this order. So remember, I'm in the market for another trade, but for now I'm just hedging. We have just been triggered. So the market is showing some wicks. So maybe this could have played out very differently if I could have used a larger stop loss, or rather a larger gap in as far as the hedge is concerned. So maybe it could have performed better. I'm thinking something along the lines of 50 pips stop loss and about 150 pips take profit, or 100 pips take profit. So let's see. I will most likely be either taking a buy once we break this level, or if it starts showing wicks and we see movement heading down, I could sell. So I just want to speed this up. I'm seeing wicks, maybe it's rejecting this level. Just using basic price action. I'm not trying to do anything complicated. I'm just trading what I see. So if you could check out this level, the market seems to be holding on to this level. So let's see what that actually means in as far as this strategy is concerned. Now, if I could have been trading the other approach, I could have decided to take a tiny buy and gotten any profit that it could have given, as the market seems to be trying to head to this level. Additionally, someone else would make the argument that the market might be forming a wedge here. Regardless of what you're seeing, trade whatever you're seeing, because it doesn't necessarily mean that that is what will happen. It just means that that's actually what you're seeing. So trade what you see, and then sit back and watch the market do whatever it intends to do. Let's see, we have buys of 0.47. Wait, didn't we close out a buy? Did I trim the last time? Because I was supposed to be trimming. I'm wondering. Oh yeah, I trimmed, and that is the delta calculation, sorry. So for the buy side, we have 0.53 available. So we could, let me place a pending stop order here. I want to be triggered if the market actually breaks here. I guess that's actually pretty good. And yeah, we'll see what will happen. So if it breaks above that level, I want to be triggered into a 0.53 trade. And if that is triggered, I'll be hedging immediately. So let's see. I'm playing this slowly. Nice. We are triggered. So we need to hedge that trade with our, see, 0.53 on the sell side. Similar trade. Nice. So let's see. So as you can see, as I was saying, this would have been a tiny win, a tiny trade, a scalping trade. As the market is heading higher, you just pick out the tiny profit. You don't need to wait for the take profit. You just see look at the candles, how they're forming, and then if it gets to a point where you think the market might want to turn back, you just take that bit of profit and you use it to close out opposing trades. I was almost there. Is that above? What do you guys think? Am I being unfair? Let's just be fair. Give it the same treatment that all the other trades have been receiving, which is we wait for the market to close above, like that. Okay, let me just click on this candle like that. So we have a bit of profit. We have a trade that wasn't picked up, and this is what I was saying. This is now us being a bit lucky. So we can cancel this sell stop, and then we take this buy trade and we use it to trim this sell. So we actually don't need to add all the other variables, we just need these two trades. Although we could try and see which one it will attempt to trim. 0.47. Yeah, it's trimming the wrong one, because it's just using the farthest available trade, which is the buy trade at the very top. 0.53, and then to 9.27. We just want $52 out of that. And then on the sell side, we have a $501 loss with 0.36 volume. So we are closing out 0.11 of this trade. Partially close 0.11. We close that, and then we close this one. So as you can see, we've gotten a bit lucky and taken a bunch of profit on the sell side. Now if you check the deltas, you'll find that the buy side, we're supposed to be adding a sell trade. A sell trade at the bottom, because the sell side has just reduced, the buy was closed, and now we need to wait. So we need to add 0.11, basically the sell that we've just removed from this point. We get to deploy it again somewhere around here and wait to see what will happen. So for now, I'm not seeing any potential area to add a sell trade, since now we can add it essentially anywhere. But let's see. So for now, I'll just place it there and trail it, since I'm more gearing towards the buys. So for now, I'll just place a sell and then see what will happen. You see, if the market actually fails to break this level, we are more likely to be heading lower. Actually, we've just been triggered. Let's try and speed this up. Okay, maybe we might be lucky to get a very nice trim in and around this level. It would be nice to take out a bit of profit from the trade at the top. Okay, now this is way slower than I expected. If it ends up breaking this level with a good bit of candle size, I think I'll consider buying. But we are heading down lower again, so we could use these profits. Since the buy is the farthest trade, I believe it should be trimming effectively. So just keeping $8. We are back to the minimal amounts, and as you can see, we can't trim anything. Finally, we are at that situation which I was mentioning. You find yourself with such a small profit that you can't close out a huge chunk of the profit in the opposing end. So for now, we can't really do anything. You just need to take this profit and let it be. So you have two options. You could either take the profit right there, or you could let the market run, and then you basically monitor what's happening. So to do that, you just move your stop loss to your take profit zone, and you just let the market do what it does. However, due to the large spreads on this pair, it's highly likely that it will just take us out in the next candle. Let's see. Yep, as you can see, wick took us out and then it proceeded. In any case, let's see if we could have exited at that point. By now, we could have been triggered on a sell trade of 0.1. Okay, I don't know why this one. This is a bug on Forex Tester, which essentially needs something. So 0.11, we're placing a sell. Just need it at market, since we could have already been triggered on this trade. So you just need to hold on to it and see what will happen. Remember, we have a bit of volume we could add once we think the market might be heading higher. And based on the wicks that I'm seeing on this level, I'm not so sure whether the market would go any lower than this zone. This zone seems like a support zone. So let's see. Okay, it's heading higher. I think, okay, let's see. Now let's just watch it for now. If I could have been using this one instead, maybe you could have trimmed the trade. The market is ranging in such a way that I don't like it, but let's see. Maybe you can get just beyond the threshold. There it is. As you can see, beyond the threshold. So we need to trim this trade. We already know that we can't close the opposing order, but check this out. As you can see, oh, we can, but then I think it's because of this $7, not because of this trade. So what do we do? Should we close both trades? Let's see, it's saying that we are closing 0.02 of this trade. No, there's no point. Let's just do the math with only the trade that we know we are supposed to be closing, which is this one, 36.4. Even if we decide not to keep anything from that trade, I'm not so sure whether we'd be able to close out anything from the trade at the top, buy trade. So it's saying that we can actually close 0.11, but then if we try to keep anything from this trade, highly doubt it. Yeah, as you can see, so we now have $72. So if you want, you could now say, remember the other trade was also like around $36, so you could say 72, and then we need to have the other trade that we've just closed without taking anything. Yeah, nice. We can close 0.01. So we could use that amount instead of just keeping those profits. We could use that amount. So we're essentially combining two trades that we won before, and using those profits to close out that trade. And we are done with that. And now we need to balance the hedge with 0.1 at this point. And I guess this should be the last trade I'm taking for this session, since I have to attend to other matters. But I guess we'll be continuing to see how long it actually takes in real life to get even when you're lucky, because as you noticed, at times we are lucky to catch a few trades where you can just get a few wins. Let me duplicate this, because I also need to monitor this other trade that could be winning anytime, and I need to trail this one. There's no specific rule that says you must trail, you can, or you must set a pending order. It's just better, since it essentially increases the likelihood of you being lucky and the market actually moving away from you. But the problem is, it isn't as often as you think, unless, let's say, you placed a trade at a support level and then the market just went back higher. It happens, but rarely, and especially if you have a tiny stop loss like I do here, like 20 pips, it's very rare for you to find those situations. When you find them, you're actually pretty lucky, and it could help. So maybe, as I was mentioning, increasing the stop loss to something like 50 pips could help. Maybe it could help. And the market is gone. So now we have all our sell trades at a support zone, and the market is gone. Anyway, we're breaking this zone. I'm not so sure whether the market will be reversing here, but bearing in mind the trade size that we have, like the stop loss of 20 pips and take profit of 40, it's likely that if we take a trade, we could have essentially cleared it by the time we get to the top here. So for now, I'll be stopping here, and we'll be proceeding exactly where this is at next time. If you are keeping track, you will notice that the PNL has increased slightly from when we started, but then we are still sitting on a loss, a huge loss of now 1750, and yeah, we really need to do something about it. But we'll proceed slowly by slowly until we get rid of that loss. Otherwise, thank you for watching, thank you for the support, and yeah, if you'd like to support the channel, you could use the discount code that Forex Tester were kind enough to provide. But otherwise, feel free to comment down below, like the video, share, and actually also email me if you have any questions and queries or concerns that you'd like addressed. But otherwise, thank you for the support, and wishing you a wonderful trading week ahead. Cheers, guys.